Morning. Welcome to Mornings with Michael, the weekend update. Here we are. This is our Bitcoin. This is our Bitcoin. We're just kind of looking at that. We're going to stop the share and reshare. Forgot to share what our word of the day is going to be today. So let me go back here and share that with everybody. Hope everybody is having a great morning, afternoon, wherever you are in the world. So let us share this. So yes, this is Bitcoin had gone down to like around 68,100. The weekends have not proved to be that much volume. It has come all the way up here to 68,700, pulled back a little bit here and pull back a little. Again, we'll just see what it does. Monday, it has come up quite a bit. And we had two different options. We had 600 shares of BitX that we had put on a short at 29. So that one has been taken away from us. And then the other short, we had 3,000 shares of BitX. And we had 30 short options at 33, and we got to keep that one. So that is our story with BitX. Let us go over to our word of the day. Our word of the day is Lunate. For some reason, I did not want to. Let me adjust the screen. Lunate is a crescent-shaped carpal bone situated in the center of the wrist and articulating with the radius. My 3-year-old went through a stage of only wanting to eat Lunate food. Okay, so that is our word of the day. This is kind of where we left off on Friday. Most of the big cap techs were up. Broadcom was down a little bit. FICO was down big. American Express was down big. And Schlumberger, or SLB, I guess they've changed their name to SLB, is down. Real estate was, and industrials were kind of mixed. Netflix was up 11%. So after hours, you could have bought it when it was up 4%. So you could have made a pretty nice change there if you've just been watching the after hours results. So let us go over. We're going to reshare. I forgot to share our PowerPoint. Once I can locate it here. I don't see it here for some reason. Here we go. I'm going to share that and then our screen. So we are back. Justice. So this was with a webinar with Mark Minervini, 2-time investing champion. And this blue line here is showing typically what happens with the market in election year. Big sell-off in this area and another big sell-off over here. I believe this is, September, October. And the gold line here is what has actually happened this year. Got a big sell-off right over here. I believe that, that was in August. And we are right about here now. I kind of moved our picture around. And so that is the story there. And then Mark showed us this chart here. He described this as an easy dollar environment versus a hard penny environment. So when the VIX is really low, look at how the market really just takes off. Now this is an easy dollar environment. And then the VIX gets a little stronger. Right now, even though the market is going up, the VIX is elevated, so it is more of a hard penny environment that we're currently operating in. And so we can kind of see this is a kind of Goldilocks economy, not too hot, not too cold. And you can just see where it has taken off here. That's the kind of environment you really want to look for. Now, this was with Scott St. Clair on Market Surge, kind of showed us these are some of the top investors. If you just look at this top one, Richard Dennis, oops, I moved right, 19 years of 120% annual return. Just think if you got 10 years of 120% annual return, where your account could be. Way down here at 29%, 34 years, 29% was George Soros. So Richard Dennis, many kudos go out to you. And Michael Marcus, 10 years of 120% annual return, 80%. Here's Jim Rogers, another famous investor. Jim Rogers, 38%, 11 years in a row. And way down here, even 13 years, all of these people were managing big money. So once you get 13, this is just amazing, 120%. So kind of look at this accuracy and confidence. In stage one, your accuracy is right here and you don't have that much confidence. On stage two, you have much more confidence. Look at this, you're underperforming in stage one. In stage three, your confidence shoots up even higher, but your accuracy doesn't move up that much, moves up slightly. And then over here, accuracy stays about the same way and it just keeps shooting on up. Now, that just kind of shows with greater confidence, you're probably making more errors. You're too confident, so you make more errors, and it's going to be harder for you to continue to keep up those returns. Psychology is a big part of this. Here's Scott right over here. S&P 500 10-year Treasury note futures ratio. This is a stock sentiment versus bond sentiment. Top 10% of readings since 1998, getting pretty elevated. This usually happens when the stock market is in an uptrend. Right now we're in a power trend. What is a power trend, may I ask? That's a pretty good question. Power trend is when the 20-day is above, actually when the 10-day is above the 20-day, and 20-day is above the 50-day, and the 50-day is above the 200. And so the 50-day doesn't, the power trend doesn't turn on until the 50-day actually turns up from a downturn. So that is how that works. Now, this is the Dow Jones Industrial Average. Now, I'm just going to bring up targets here. Our targets really haven't changed from last week, but on the Dow Jones Industrial Average, I believe it's going to hit 411.32. What do we got here? We got a bullish Harami, and it did move up. And now what do we got up here? We got a hanging man, followed by another hanging man. These are both bearish. And right here, you can see this commodity channel index is heading on. And what do we got here? We got lower volume. And we got it's a big ways above the moving average. So all of that is kind of bearish for the moment. Because something is bearish, stocks can move up much higher than people anticipate. And a bear market, likewise, they can trend down much more than anticipated. So this is the IWM, the Russell Small Cap Index. We got a bullish Harami. May have gone up slightly here. As we talked about the Russell long time, it really hasn't made a new high in 2.5 to 3 years. We got a bearish hanging man right over here and a bearish harami. It is highly extended above the moving average. We got an increase in volume on the sell side. This still pretty elevated. It doesn't look like the stochastics is bending down, but the CCI is. So this is slightly bullish, would be bearish. This would be bearish. This area right here would be bearish, and the signals are bearish. So that is the story with the IWM, and our target on the IWM remains unchanged at 212.78. Once again, the Dow Jones is 411.32. Moving on to the NASDAQ, QQQ. This right here had a downturn down to the moving average. So up here would be a hanging man, right here would be inverted hammer. Did move up some. Got a spinning top right over here. What happens when you got a bullish signal, bearish signal, bullish signal, bearish signal? Kind of get a doji or a spinning top right over here, so you need more information. Got a little, almost looks like a little lower volume on the buying over here. It's heading down on the stochastics, and it looks like the CCI is starting to move over. So this is kind of a mix of bearish signals right here. 1, 2, 3. It's not that elevated above the moving average, but it still is elevated. So that is where we are on the NASDAQ. On to the S&P 500. Very similar to the NASDAQ. Got a bullish, got a bearish, got a bullish, we got a bearish, and now we got a spinning top. So all of these together can be a spinning top. Doji needs more information, but this is elevated above the moving average. We got slightly higher volume here on the buying, but when you really look at the S&P 500 over history, it is really kind of low volume. And Theo Trade, Don Kaufman really illustrated this on his report on Friday. And stochastics is heading up a little bit, and it's pretty flat on the CCI. So that is the report there on the S&P 500. So we are pulling back to the moving average on the VIX. It is trending down here on the CCI, and the stochastics are heading down. This really looks like a lot of bearish indicators. Pulled back to the moving average. What happened the last time is popped up here. Can't really see back when the yen trade came on. Can't really see if it had come back to the moving averages here, but we can take a look at that in a few moments. The border is still the #1 issue, and the Americans are feeling the pinch. Who is paying for all this moving around them all over the country, placing them in smaller areas? Who's paying for that? The U.S. citizen, and they're getting tired of that. All these people are given debit cards. They're put up in hotels and whatnot. Who's paying for this? The U.S. consumer. We had the list last week where it was $150 billion paid out to this. So yes, the U.S. Taxpayer is getting pretty tired of this. So stagflation odds jump in the latest New York Fed survey as inflation expectations rise. Delinquencies fears hit a 4-year high. Look at that jump way up there. 5-week range in the U.S. 5-year inflation swap. This is the biggest jump in inflation expectations since March of 2023, right before Silicon Valley Bank's collapse. So we do have that. And then we have this: consumer expectations about their financial situation over the next 5 years drop to the lowest level in 11 years. Look at this. This is why I kind of feel like we're already in a recession. The media, current government in place, are kind of covering this up. There's not going to be any talk about it because we know where the media stands, and we know what the government is trying to do to keep their power. This is full-time employment, year-over-year percentage and change in employed full-time, wage and salary workers 16 years and over. Full-time employment dives. Look at this huge dive. All these indicators are kind of showing recessionary numbers. And U.S. mortgage applications have dropped by 17% over the last week, the most since April of 2020. At the same time, refinancing fell by 26.3, posting the biggest decline since March of 2020. And we know what happened then. So have this U.S. deploying troops to Israel with THAAD. Our money is being spent all over the place. A BRICS currency could shake the dollar's dominance. They're going to be having a meeting in Russia. Putin confirms BRICS will explore digital currencies for investment development. If the BRICS currency really takes off and they start buying oil, this could really surge inflation. Cost of oil will definitely, not being dollar-based anymore, could really hurt the U.S. economy. And now BRICS eyes creation of a central bank for currency issue, backed up by all the gold that they've been buying. And Indonesia likely to decide on joining BRICS in the next governmental term. So that is our news. Let us go over to our charts. First, let's take a look at VIX. So before the big spike, what happened? Really sold off, came below the moving average here, and then just started ticking up and then really took off on the yen trade. So this is what it's come down to, the moving average here again. Will this be a springboard for the VIX to really supercharge higher? Our target, near-term target is 2688. Not sure if I gave the S&P 500 target. We'll just pull that up here. S&P 500 target is 555.58, and that probably will happen once the VIX spikes up because they move in diametric opposite directions. So I'm going to take a look at some recent breakouts. This is Blue Oil Capital. You can see it broke out right around here. It gap up, pulled back a couple of days, and then took off. If you were following your gap up rules, you probably would have got out of this. And then you certainly could have gotten back in right here as it cleared that. Paymentus Holdings is breaking out, provides cloud-based platform for bill payment technology. Breakout was 2387, right over here. Continues up, it's a little extended right now. Carnival has kind of broken out. 1958 was a breakout point. Carnival cleared right over here. Had one small pullback and then a gapped higher. That is Carnival. Next on our list is Morgan Stanley. Morgan Stanley clears 120. Their earnings came in at percent up. Their earnings in 2024 is supposed to be up 40%. Next year, 8%. Sky West, 87.96 is a breakout. Cleared that right over here and continues higher. Just going to look at the top 10 floor. Kind of clearing there. The breakout. Agilus Barella, Weinberg Partners, strategic financial tactical advice in connection with executing corporate actions. Synchrony Financial broke out here, 52.77, right over here, and just continues upward. Finally, Raymond James Financial in the financial area. So let us go. I'm going to go over to industry groups. Let's take a look at the top 10 industry groups. Guess with Netflix kind of surging last week, leisure, movies related, and take a look at Netflix. Gapped up out of this kind of area right over here, up 11%. Next is mining, gold, silver. It is really trending higher. Once it cleared this area, pull back. Can be a little volatile, but it is trending higher. We didn't really look at silver, but silver, what do we got here? Looks like we got we don't have a double bottom, but it's kind of got a cup here. This is a handle. If you look closer, it could be a cup with a handle, with another cup with a handle right over here, gapped up here, and it's sub 6% on Friday. And this is gold. And this is a mining and metals ETF. Just continues much higher. Medical systems equipment. It's bouncing off of the 10-day moving average. So what you can do, you can just go into these areas, kind of look at companies that are leaders in these areas and see if it looks good to invest in them. This is energy alternative other. Transportation airline. It is just taken off. We'll go over here to jets. Had a breakout right over here. This would have been the time to invest in this ETF. Let me see where got lost. Here we go. Just going to look at the top 10. Telecom, service, wireless, building, residential, commercial. Looks like it's getting ready to kind of break out there. Medical products is number 9. And number 10 is computer software database. Dave was the one that we kind of got out of. You might want to watch this. It did get some support, even though it sold off here. It sold off again, getting close to the 50-day, and it got some support. We'll just have to see if it's able to correct itself. But that is our show for today. This has been Mornings with Michael, our weekend update. Go out there and enjoy the rest of your weekend. We look forward to seeing you on Monday morning. And just keep on working on your goals and your activities. You know, if you want to, you can write down your goals 3 times a day, kind of get it into your psyche. I do that myself. And if we can help you at all with any of your financial goals or activities, feel free to reach out to us. And thanks for joining in. This is Mornings with Michael. For information and educational purposes only, it is your responsibility, your due diligence to find out if what we offer or share that we do is right for you.